Thanks for joining me. You've been here at the desk and, looking at the market today, 35,244 points, a new record high, and financial stocks just in vogue right now.
Financials are flying. Financials are the new retailers. Yeah. These aren't local buying. This is definitively overseas people buying. You can see it in the rand as well. No local is going to push first rand 4% in a day when it's already relatively, I wouldn't say expensive, but it's not. It wasn't cheap before today, and now it's certainly not cheap. So
it just shows you the power that foreigners have over the local market.
2 years ago, no one wanted to touch a banking share. We sat in this program and said, you should buy banking shares because they're at 8 PEs and they're reasonable value, but no one was interested. Now they're 15 PEs. And first rands are 15 PE. This is not value. You're actually not buying value here, but it's not stopping the shares from going up. But we're at an all-time high. Resources, Anglo-American is half its all-time high. BHP Billiton is two-thirds of its all-time high. Platinum shares are 1/3 of their all-time high. So this has only been one game in town, industrials, and now in the last 6 months or so, financials.
And is the same game going to continue?
Same game.
Carry on playing the same game.
I can't see the game changing, but simply because I think the market's wrong. Yeah. I think the market's wrong. These resource shares are seriously cheap, but they just go down.
What's hitting SABMIL today? Down 2.25%.
There's no particular news on SAB there. There's no particular news there. But to hit an all-time high with SAB going down is actually quite unusual.
It is very. I mean,
so
even
this is powered
British American Tobacco was down today.
This is powered banks, retailers, because the retailers have been very strong here. I mean, the Massmart, ShopRite, they're also up 2-3% on the day.
Nedbank was also one of the top gainers
but they
today.
had good results, and that's fine. And they've been lagging first rand, so it's fine that Nedbank goes up 3% or whatever.
You're happy with that? I mean, there's the share price this week, up 2.3% this week. It's a much cheaper share
than where first rand is. Of course, the cheapest share of the whole lot is ABSA, but with what's going on there, do you want to buy it? But first rand's 15, ABSA's an 11 PE, Nedbank's about a 13 PE, so it looks reasonable still. But first rand,
where do you think this Nedbank share price is going post the results? They said basically that you're not going to see the same growth going forward in the second half.
You can't really expect that. The growth was phenomenal. I mean, it was, normal growth for a normal consumer-orientated company over time can't be more than inflation plus 5 or 6%. So to come up with a 20% number, you must know it's unusual, that you're not going to repeat it. But even if that growth rate falls to 10, 11, 12%, a 13 PE share can handle that. That's still reasonable valuations. And of course, we know low interest rates are here for an extended time period and maybe even lower. So under that scenario, banking shares aren't going to fall. Same as the retail shares won't fall.
I mean, we've seen headlines today, it doesn't make sense, the market hitting all-time highs and the recovery in the economy sluggish. And of course, these are very cyclical stocks.
What you must realize is that the mere fact that a market's hitting an all-time high or not is quite honestly irrelevant. It's the valuation of the market that counts. Now, the long-term average is a 12 PE through thick and thin, up and down, good times, bad times. The market's now about 13, 14. So it's starting to get a little bit above its long-term average. It doesn't mean it's expensive. It doesn't mean you must sell it. It just means we're not about to embark on another bull market. The market is not fantastic value at this price. And anything can happen, eh? But if the market goes another 10%, let's say it goes to 37, 38,000, then I would be a seller, because then it would just quite frankly be expensive. So you can still hold at this level, but don't get too excited.
Okay, let's talk about some of the results that we've seen this week. SAPI came out with their results
today. SAPI's in a terrible place.
Okay, so obviously their paper business still a key contributor. But what about the cellulose part of their business? Because that's going to come online next year, 2013. They've currently got 800,000 tons in terms of production, and they're adding another 500,000 tons. EBITDA margin in that is 30%.
No, look, this will be very, very good for SAPI, but their core business, look, SAPI had a terrible time. I mean, SAPI went overseas and bought paper mills in the UK, in America, and especially in Europe, and they bought it at exactly the wrong time, and they sat with the overcapacity, and they just got caned. I mean, they almost went bankrupt. I mean, they came very close to going bankrupt.
They basically said that they still need to get rid of excess capacity. I mean, that,
and there's still too much capacity. Look, this is the one industry where let's call it the internet and advertising on the internet and computers have had a major effect, and that is glossy magazines. Glossy print, no one...
Structural problems, same story.
And that's exactly where SAP is in. So
if you have a longer-term view and you buy into the story that they're making the raw materials for products that are in the pharmaceutical sector, in the clothing sector, would you be buying SAP right now?
There's still too much paper here. What SAP should do, and maybe they are going to do it, who knows, they should actually spin that business off separately. Leave the paper under one listing and then spin the growth industry off on another listing, and they'll probably enhance shareholder value.
That's what Mondi did.
That's exactly
with their packaging business. Yeah.
It's exactly that. They spun out the impact and they said, well, yeah, we are now, you can choose what you want. And if that's a growth industry and it's really going to work, the paper industry is going to taint that. So they might as well split it and spin it out separately, because they'll probably add value onto it.
Yeah.
But and SAP is a very difficult space.
Insurance space? Because
insurance of flies. They just
you think so? And Liberty's results this week?
Results were good.
Were they not hiding the problems in the underlying insurance business? Because retail South Africa, that's the insurance part of the business, their headline earnings per share actually fell back slightly, 1.2%.
Look, the insurance companies are now running, look at MMI today, they are now running because the share market's going up, and the share market is a great influence on a life company result. But understand, the average life company in South Africa is ex-growth. The industry is saturated, the market is saturated, so you can't get terribly excited about the growth prospects, but you can buy them at good dividend yields.
Yeah.
I mean, you can buy Liberty a good dividend yield. MMI is a good dividend yield. Discovery hasn't got one.
It's 1 year high, the stock.
Oh,
Liberty.
yes, yeah. But I mean, like MMI, you know, it got caned a little bit earlier on this year. Now it's back up at a record high, or very, very close to a record high. So the market likes the dividend, quite frankly, and the dividend isn't under threat. So you know, if you want a nice, good dividend share, buy some of the life assurers. Old Mutual's a little bit different because it's gone overseas in that, but you can buy Sanlam at a decent dividend yield, and MMI and Liberty.
What about Old Mutual, because it's got this Nedbank turnaround story?
Yeah, no, look, that could be very good. I mean, remember the days at R4.50, no one wanted to touch Mutual because it was going bankrupt, and no one wanted, you know, what's it now, 21 Rand, 20
Well, that was in the days of no one wanted to touch anything. They were selling off everything.
You know, but it's still fair value. It's still trading below intrinsic value. It still has its fair balance sheets completely restructured. No, we still like Old Mutual, and they've actually got quite a bit of Old Mutual.
We've talked about resources. Let's look at kind of the resources that are very much geared towards you know, specific commodities. Yes. Exxaro came out this week. Profits were up by 14%. There's some question marks around the coal price, specifically if government comes in and gets involved in regulating the coal price. Concerned around that?
No, effectively the coal price in South Africa is already half regulated, because Eskom almost tells you what the price they're going to pay you, and you have to take it, because otherwise you're going to have such massive capacity.
And they're locked into contracts.
They're locked into 10 years contracts. So they make, the coal companies make a decent return, but I think it's a little bit more hot air. I think it's a little bit politicians talking their book there, but effectively they already get what they want from the local coal producers. In other words, coal at a reasonable price. Now the big furore about all of this was in the bad old load shedding days, Eskom had to buy coal at the open market price. They needed more coal than what they could get from their contracted suppliers, and that's where this all started up, as to why are South Africans buying coal at this massively inflated price when we have got it locally? Why are we paying a global price for a local asset?
What do you
there was a little bit of an exaggeration.
Exxaro, though, as a share that's with a good manager now.
That's interesting. Exxaro, earnings are up, eh?
Yeah, they were up, and the stock fell down.
And they're 7 PE, and the share goes down. It just seems people just hate these resource shares, no matter what the valuation is. But I think Exxaro is right. If you want to buy platinum assets, now's the time to buy them, eh? Because you're going to get them for nothing, because people
platinum assets.
Platinum assets.
Okay, so you're a platinum man right now.
I'm not saying a platinum share. If I could buy a platinum mine on a 10-year view, you might do it, because people have got their backs against the wall. No one's making money out of it, so you can buy them at bargain.
How much money do you have in that back
pocket? I haven't
pocket?
got that kind of money.
Thank you so much,
Wayne.
Wayne McCurrie from Momentum Asset Management.